Hello everyone, so today our group will present the subtopic from chapter 7, which is Islamic Exchange Trade Funds, or we call it as I-ETF. So before that, I will introduce my group members. First, we have the beautiful NURUL ALYA AFIFAH and the gorgeous NURIN ALANI, the pretty MAZRINA FATIEHAH, and the only cutie one SYUHADA.
Hi, my name is NURIN ALANI. Did you ever heard phrase that said you should invest in I-ETF? Wait, really? But why? Okay, let me explain to you guys the advantages of investing in ETF. Okay, the first advantage is diversified exposure. Through one unit of I-ETF, investor can get immediate exposure to the companies that constitute the track index. And ETF hold a basket of securities with the objective of mimicking the performance of an index. And this basket can be made up of shares, bonds, or commodities depending on the index that the ETF is based on. So the next advantage is cost effectiveness. Lower annual management fees for ETF compared to unit trust makes ETF economical to buy and to maintain the long run. For example, we can buy a diversified portfolio with the same low commission as a stock. And as the fund is specifically managed, the management fee is considerably low. And the third advantage of investing in ETF is simplicity. So ETF are listed on the main market of Bursa Malaysia, and then the buying and selling of ETF units are done based on its current market process is in a single transaction. Next, trades can be done online or through stockbrokers. So the next is transparency. I-ETF price is readily available on real-time analysis throughout the trading day, and actually investors know exactly which stock or underlying assets is held in the ETF by visiting the ETF's website provided by its manager. And for the mutual fund, the underlying assets is only disclosed in the annual report. And lastly is because of cheap price. ETF are traded in bulk lots of 1,000 units, and the expense ratio on most ETF is about 0.01 to 0.25%, meaning that for $1,000 you invest, you will only pay 0.10 to 0.50 in fees. And ETF fees are some of the lowest out of mainstream investment products and save investors a lot of money in the long term. And in Malaysia, ETF are traded in bulk lots of 100 units.
Hi, Assalamualaikum. My name is SYUHADA binti Muhammad Firudin. And next is I will present about the differentiations. So we want to know whether there is difference between conventional and Islamic ETF. So actually their concept is same, but there is also the difference between Islamic and also conventional, which is the first one is the underlying stock must be Sharia compliant stock. I-ETF must have Sharia committee. And next is the regular review of Sharia compliant is by Sharia committee. And the last one is underlying instruments associated with securities lending, futures and the options. Okay, for the next differentiation is between the ETF, stocks and also unit trust. So the nature which is ETF and unit trust, the units is represent underlying stock, while stock is stocks, and ETF and also stock have the trade on exchange, price transparency, trade through broker and also brokerage, while unit trust didn't have all these items. So next is redemption. So ETF and also stock is from the KLSE, which is Kuala Lumpur Stock Exchange, while unit trust is their fund is from itself. Okay, for the diversification and also management fees, ETF and unit trust have the fees, but stock didn't have the diversification and also management fees. Okay, for the cash settlement, which is ETF and stock, T+3. Okay, T+3 means the trade plus 3 days, which is okay, for example, we buy the securities, the brokerage firm must receive our payment within 3 business days after the trade is executed. So that means by T+3. While for the unit trust, that's upfront, which is between the parties, whether how much they want the fees, which is how percent and so on. Next is the risk on Islamic ETF, which is actually Islamic ETF is involved in the investing in ETDs. The first one is market risk, tracking error, and also discount NAV, net asset value. So this risk on an ETF can be reduced by, the first one is align the objective of investing in ETF, whether short or long term. The second one is we know the information on the index that ETF is tracking. And the last one is we have to know the information on the specific companies, which is the component of the ETF companies, so that if we follow this step, we can reduce or we can lower the risk on the Islamic ETF.
Process of I-ETF is going. For the first one is the first and foremost is to choose which Islamic index is going to be benchmarked. Screening on the chosen underlying assets will be done truly and must in line with Sharia. Second, the participating dealers have to deliver the baskets to the trustee in order to create units of ETF. ETF units represent underlying shares. Third, the units of ETF will be given back to the participating dealers and eventually be bought by the investors via liquidity providers. Fourth, having owned the ETF units, the investors can then trade via a secondary market. And the last one is, at the time of the redemption, the participating dealers will accumulate and deliver to the manager and trustee the specific number of ETF units. As an exchange, the participating dealer will get back the perfect basket. the question is, who are the players through this process? So the players include manager. Manager is managing the ETF so that it can be in line with the trust deed and securities law. Next, trustee. Act as custodian of the assets of ETF. Moreover, to ensure ETF is administered in line with the trust deed and securities law. Furthermore, it safeguards the interests of the ETF units holders. And then we have participating dealer, the entity that facilitates in-kind creation and redemption of the ETF units. Also act as liquidity provider. And then the other liquidity, aid in providing liquidity to the ETF. And lastly, we have investor. Via brokers, they will invest in the ETF units.
Hello, I am NURUL AFIFAH. So I will continue with some people who had curious about issues in I-ETF. So let's see, is there any issues regarding I-ETF? So let's see, the first issue is purification or earning. Sharia scholars have different views about whether the purification is necessary, where the profits are made through dividends, capital gains, assets, or liabilities. So justification for this issue, as per the current Sharia guidelines, purification is carried out and any interest income earned and paid to the shareholder through dividends only. So the existing mechanism only purifies the dividend income portion of the shareholder, and that too on a partial basis. A dividend to purification rate is calculated for each company and applied to the dividend income earned from the company. So let's see, the second issue is liquidity. Large majority of Islamic funds is not listed in any stock exchange. While it's important to look at how ETF shares are trading, the fund's underlying holdings are really the heart of the liquidity issue. One problem is that market makers, those who help maintain orderly trading in ETFs, get rebates from exchange that are calculated on a per share basis. Thus, they may not have much incentive to maintain relatively narrow gaps between bid and ask prices in funds with very low trading volume. Liquidity may be lower based on liquidity of compliant issues in Islamic exchange traded fund. So from the technical issue, ETF requires intense technical infrastructure and regulation for exchange, custodian or settlement bank, manager and market maker. Regulations and technical systems are usually established for conventional ETFs. Infrastructure may be incompatible with Islamic ETFs for some instances and may require adjustments based on issue in Islamic exchange traded fund. So let's see, next issue is compliance limitation. Short selling of Islamic ETF may conflict with Islamic principles. Asset lending may be limited according to some schools. Futures and options are also controversial, so it is hard to establish Islamic commodity ETF based on futures contract. So the last issue based on asset allocations. Since asset classes are limited, equity and bond ETFs will be major types. Compliant bonds are best for allocation purpose if their market is liquid. Gold and FX are compliant as long as they are traded in spot market. Conventional hedging strategies using futures and options on ETF may not be available.
Okay, now we have come to the conclusion of this topic that ETF is one of the fastest growing segments of the investment. And next, it provides liquid access to virtually every asset class and allow both large and small investors to build institutional caliber portfolios. However, the conventional ETF fall short in a number of Sharia compliance issues. Then the equities held in a conventional ETF are not screened for Sharia compliance. Therefore, the core business activity as well as the financial ratio are at high risk of non-Sharia compliance. And lastly, Sharia compliant ETF must undergo Sharia screening of its business activity as well as its financial ratios. In terms of tracking, a Sharia compliant should only track a Sharia compliant index. So that's all from us. Thank you.